Well, our next guest ain't fading anything. That's because he is Wall Street's biggest bull. But there's always a but on Fast Money. He sees a near-term pullback coming. Let's head over to the plaza where Fast Money friend Tony Dwyer, the chief market strategist at Canaccord Genuity, is here with his latest call. Tony, we simply call him, by the way, the Raging Bull, or
Look
Robert
at
De Niro's
that shot.
I need a picture.
Dramatic.
Take it away, Tony.
With my changed hairstyle. Well, listen, you know, I am a raging bull. There's no question about it. If you actually discount or look at every news item this year, you wouldn't believe that the market's up as much as it is. And it's because it's following earnings. What we have is a very strong economy where consumer confidence, business confidence, and CEO confidence are right near a historic high. Actually, if you look at NFIB, which is small business confidence, it hit a cycle high in May. Historically, over the last 7 cycles, there's been a 41-month lead time from a cycle high in that to a recession. Nowhere near a recession. We have a maturing millennial demographic. And what's important about this is I'm a millennial. Most people don't realize it, but I'm a millennial, guys. When I was 25 years old, all I wanted was experiences. When I turned 27, I met my wife. When I turned 28, got married, 29, first son, 30, second one on the way. The reason I say that is the millennial demographic peak birth year is just turning 28. My niece Kate has 14 weddings this year. Home ownership and spending are on an upward trajectory, and that's not going to stop anytime soon. We also have huge earnings growth. 20% plus this quarter. Is probably going to be closer to 25% when it's all said and done versus the 20. What we don't have is an attractive entry point. I think, again, if you're looking for the next 6 months, buy it. It doesn't matter. But from if you want to try and trade it a little bit better, I think we're overbought in a market where only 52% of stocks in the S&P 500 are above their 10-day. In a highly volatile year, which has been our plan all year, we want to buy weakness versus chase extreme strength, and we've been overbought for some time now. And when you look at the earnings, one thing that I wanted to point out that's really important that most people don't realize is that profit margins. Remember back here? Right there where the profit margins were taking a dip, people thought you were going to revert to mean and we're going to go into a recession. What I wanted to point out is every single peak in profit margins prior to a recession, every single one of them came with an inversion of the yield curve in a recession and a top-line failure. So we are making a new high on profit margins. We're not peaking profit margins. We have a lot of duration here, and that's why I'm a raging bull, and I would buy weakness.
Should Tony come over? And I'm asking genuinely.
I mean, he's a raging.
Buy it.
Well, after the
millennial.
I got scared.
Tony.
Michelle will bring the chair in. Thank you, Michelle. Tony, what would make for an attractive entry point?
Okay, so I look for the percentage of stocks above the 10-day moving average to drop below 20%. I look for the VIX to go up into the upper teens, preferably 20. I look for the Investors Intelligence newsletter bulls to drop down to 45% or below. They've recently jumped up to over 55%. And I'd look for the weekly stochastic to come out of overbought. It's an extreme overbought. So I'm not, you know, please don't take this as a sell. This is not a sell. This is a wait to buy. And if you're an extreme overweight tech, I think you just stay overweight, but just cut it back. The price has given you such an overweight, you take a few chips off the table there.
All right, well, let's say you have no money in the market, right? Would you just allocate half or something and go ahead and buy even though you don't think this is a good entry point? Or would you wait for a good entry point?
If you have no money in the market, I would, because I got to say, you know, I'm going to break the cardinal rule for strategists. My near-term feel stinks right now. So, you know, I don't really have a high conviction on the pullback. It's more of a pause than we're going to go down 5 to 10%. History shows that when the rate of change for the S&P is where it recently got to on this bump up, you have a 2 to 5% pullback in the context of the bull market, the uptrend that started in April.
So I think that makes sense to me. I don't hear you stamping the table, even though you've been bullish and consistent there. So what do you do with the move higher in yields this week? It's not necessarily because of growth or inflation. It's because of factors we might not be able to control. Does that scare you? Would that be an outlier to your bull call?
The thing that made me the most nervous at the end of last week was the way that the yuan was trading in China. And even today, you got a little bit of it looked like it was going to rebound against the dollar. This is the offshore Chinese currency. And it's had the highest 10-week rate of change in its history. That makes me a little bit nervous. The market doesn't care, and that's okay. So I just feel like the banks are still good because you're getting this upward pressure in yield. We did a show on that probably 3 weeks ago. This is just an exciting and overall environment with kind of a nuanced situation where you may just want to, to Karen's question, you put a third in here, you wait, put a third in on another decline, and not care about the rest of the third. Just, if you make a new high or if you even go down worse, add it there.
No, we have a crack staff back in Englewood Cliffs,
Yes,
as you know.
we do.
No, but
Why do you bring it up?
No, I bring it up because they do their homework, and yeah, we actually do have some. We just want to know what it was like working with De Niro back in the day. I mean, look. I mean, look at the resemblance.
Buddy, I'm on this show. I could take a punch. Go ahead.
we're pacifists.
Yeah, go to my
here on
Twitter.
CNBC
You'll see I'm taking a punch.
Tony, thank you.
It's
Tony
great to be
Dwyer.
here. Thank you, Mel.
Rate it.
Giddy up. Hashtag giddy up.
Look, I mean, I think everybody I talk to says 2,800. We're going to get to 2,800, and you fade it. You fade it at 2,800, and whenever that sort of happens, that narrative or that discussion occurs, we always break through it and end up going higher. So I agree with Tony. There's a big risk that we do have a little bit of a near-term pullback at some point. I just don't think it's right now. I think we're going to continue to move up to that level at least, if not break through it, and then maybe have a little bit of a sell-off.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.